Well, we're a group within the commercial group of Bank of Ann Arbor, focused on serving the needs of technology, life science, angel investment community, and the venture capital community.
Now, you're also playing roles, as you mentioned, with the angel and VC communities, and you mentioned you've helped put together an angel group in Ann Arbor.
Right. Well, I'll give you a little history on that. I mean,
Okay.
I joined the bank 6 years ago now to start this group. Kind of came to the bank with the idea of, Bank of Ann Arbor, you're centered in Ann Arbor here, you're focused on this community, building companies here, and this tech community is a really neat thing about Ann Arbor. It's very unique. It's particularly unique in the state of Michigan.
Right.
How much entrepreneurial, kind of innovative companies that we have. And so one of the assets of the bank that I noticed when I was putting the business plan together for this tech group was the bank had some of these early stage technology companies that were, just banking customers.
Right.
They were looking to try to find and get hooked up with angel investors. And the bank was able to make some introductions because of this network that the bank has in town here.
Okay.
Which is a very valuable asset for the
So
bank.
it was very informal at that stage,
Absolutely,
but working.
very informal, but there were, case studies within the bank, if you will, of that happening and happening
Right.
successfully. So as I built this plan out for the tech group, it was, well, what is the best way to more formalize that activity? It's a great asset for the community. It's a really neat thing for the bank to be involved in with its customers. And out of that came this Ann Arbor Angels group, which was, let's more formalize these kind of introductions that we make to our network.
Okay.
But not only that, let's see if we can expand that into a larger context. So partner up with the University of Michigan and their entrepreneurial studies group, the Zell Lurie Institute, their tech transfer office, and at that time the Ann Arbor IT Zone, which is now kind of merged into Ann Arbor Spark.
Right.
So some of these other entities that are very engaged in this community and have pretty good networks into this angel community, let's try to kind of bring all those Rolodexes, if you will, into one spot so that we can help these companies maybe connect with these folks a little bit more efficiently.
So now, how is the bank? You mentioned the bank was doing two sorts of things with the venture capital community, and they were,
and that's the newest of this kind of three-legged stool, if you will, of a strategy that we developed here back 6 years ago, which was initially, let's focus on technology companies and life science companies, and providing business banking services for them, and particularly, traditional business banking services for kind of these companies that with track records and things that they had done before. The second leg of the stool was really starting to develop products and services for the angel community, and the third being products and services for this venture capital community.
Okay.
Which we are just launching this year. And on the product side, that includes what they call capital call lines of credit for venture capital firms themselves.
Now, what is a capital call line of credit?
So venture capital firm raises money from a bunch of individuals or institutions
Okay.
to raise a fund. But day one, they generally will get, let's say, 10% of the commitment out there. They will call in 10% of the capital that has been committed to them on kind of the first day. So
Okay.
they get, I'm raising a $100 million fund, let's say. Initially, I've got $10 million kind of to invest. I've
Right.
called, but I've got 90 million still out there that people have, legally obligated to commit to me when I go through certain procedures or a capital call.
Okay.
Sometimes there'll be timing differences as they go to make those next stages of capital calls, and that's what a capital call line of credit does.
Okay.
So they can draw down the line. Let's say I need to put small monies into a few different companies, and I don't want to make a real small capital call to all these investors. So just as a convenience, they're able to pull down a line of credit for a while until they maybe get up a larger need for a capital call.
Okay. And then you mentioned also, I think you said you were making a line of credit available for their portfolio of companies?
Well, what we call venture debt financing there. So that
Okay.
is debt that comes in alongside a venture capital round of financing.
Oh, interesting.
So again, let's say, and we are focused very much on these earlier stage rounds of venture financing. So what they would call Series A or Series B type financings.
Right.
So let's say the company was raise $10 million in a Series A financing, which would be fairly large for a company, particularly in this region.
Right.
Then the bank would maybe look at $1.5 million, $2 million line of credit or equipment type financing package to go along with that $10 million equity.
Now, how does the evaluation process for that work? I mean, are you working with are the VCs coming to you and saying, we think we might need this credit for this company? Is that how that's working, or?
That's one of the ways it can happen, and that's why why we have part of the strategy from the bank's perspective is these capital call lines of credit. I mean, because we want to get involved in a close relationship with the venture capital firms, so
Okay.
we understand when they're raising funds and when they're deploying funds and investing in companies, and we want them to think about the bank when they're deploying funds as a potential other kind of source of financing for these companies.
What the bank is doing in this case is, to some degree, it's relying on the venture capitalist and the venture capitalist track record in having successful companies, and basically betting on that in making these forms of financing available to venture capitalists. Is that correct?
To some extent, that's right.
Okay.
Yeah, no, I think you've grasped onto an important point. Bud, and we were talking earlier about this primary source and secondary source of repayment that banks are always looking
Right.
at. And again, banks are federally regulated financial institutions, and so they play a certain role in the whole kind of financing spectrum out there. And we can see by what's going on in the economy a little bit today. What happens when the banking system, in your country or in your state or in your region begins to have some difficulty. It's got ramifications through the whole economy.
Oh, yeah.
It's an area of the finance community that is heavily protected and regulated. So that's why you're looking at when regulators come in and they'll check our portfolio.
Right.
Every year, and they're looking at what's this primary source of repayment, what's the secondary source of repayment, and so you're dead on with this venture capital financing, understanding who the venture capital firm is in the transaction, how much money they have set aside for additional rounds of funding, is a very important element of analyzing the risk of that loan.
Where do you see the evolution of this going in a year? And if a year's not the right time frame, the next couple or 3 years?
Well, in the next year, we're looking as far as kind of doing new things. It's this venture debt and venture capital financing area. I mean, we're looking to really solidify that area, get some transactions under our belt there, and so that would be the piece for the next year. But moving out, I think that there is a great opportunity for the bank to, really help kind of not only grow companies here, but help put Ann Arbor on the map a little bit in this whole tech business community by expanding out into the region and being a part of this tech business ecosystem, if you will, in Ann Arbor, an important part here.
Okay. Well, great. Well, thank you very much, Michael.
Okay, great. Thank you.